Once again, we have a Targets in Focus interview with an industry professional. Their views on what economic news will have pairs moving and shaking this week. Today I'm joined down the line by Stephen Goldstein, Trader Development Consultant at BGT Edge. Mr. Goldstein, thank you for joining me today. This week there are many data releases and events surrounding Europe's debt crisis, with Dutch elections and Germany's top court poised to rule on the Eurozone bailout fund. How will the news from Europe affect the currency markets this week?
Well, I think obviously the Germany's top court, that's the big one. At the moment, I think the feeling is that it's not going to disrupt markets. But of course, a surprise on that one, particularly a negative outcome, it could really dent sentiment. And again, I mean, the thing is, the markets have got a real positive sentiment about them at the moment. So I think, any negative news, any shock news from either the Dutch elections, less so the Dutch elections, but definitely from the German court could set this back quite severely.
Many analysts have been saying the same thing, that the euro-dollar will make very little movement before the Federal Open Market Committee announcements. Thoughts are now that the Fed will introduce additional quantitative easing. How will this affect the euro-dollar, and what are your short, mid and long-term predictions for this pair?
Now, again, I think the positive sentiment on the euro-dollar and the negative sentiment lately on the dollar, has been in anticipation of the growing belief that there's going to be further quantitative easing. And I think that's pretty much baked in the pie now. And I think we've seen this quite a lot over the past couple of years when the market starts to discount that they happen. You get a favourable move into the number. But quite often you get a kind of buy the rumour, sell the fact reaction, and I think we could see that a little bit with the FOMC. I think we could see further upside to the euro-dollar on when they announce a QE, and further weakness for the dollar itself. But it's always got to be looked at what the terms are, whether there's going to be anything slightly new in it, slightly novel, whether there's going to be any caveats. But I mean, if it's pretty much what people are expecting, I would expect perhaps a short-term rally, short-term selling of the dollar. But then I think people will start to say, well, I think the move is going to be pretty much baked in, and people will start to take their profits in the wake of that. I think we tend to get, especially with the quantitative easing, we tend to get some moves up to the quantitative easing as the sentiment sort of rallies into it. For example, we tend to get dollar weakness into the quantitative easing. We tend to get stock market strength. We tend to get a risk-on move. And then when the actual quantitative easing is announced, pretty soon afterwards we have the market taking profits, which kind of emphasises a sort of buy the rumour, sell the fact reaction to this sort of stuff. And then I think people tend to reassess what comes next. Is all the good news in there? And sort of moves on to the next thing. So I think the rally in the euro-dollar on the past couple of weeks, which got ahead of steam last week, is part of that buy the rumour move. Longer term for the euro-dollar, I'm not really looking for a move much more than this. We may see a move perhaps this week on the news or into the news, if we don't get upset by the Dutch elections and the German court outcome, and move up towards the high 120s, 129. There'll be a lot of people looking to take profit there, and I still think the bigger directional thing for the dollar is looking further selling again.
Sentiment on sterling remains supported after stronger than forecast services and manufacturing data last week indicated the UK economy was not performing as poorly as had been feared. What is trading sentiment towards the pound, and what are your short, mid and long-term predictions for the cable?
Okay, the sterling, well, I think sterling's benefited lately from being neither the US dollar or the euro. There's been an element of flight to safety about it. You've got a very liquid major currency that doesn't have the immediate concerns. And I think we've seen that over the last few months, really since the low in June against the dollar, but also its performance against sterling, against the euro. Obviously, it's given some of that performance back against the euro over the last couple of weeks. But I think overall, I'd expect the euro sterling to stay strong, or to recover its strength against the euro at some point. But I do think its rally against the dollar may be limited at some point in the low 60s, maybe 162, 163, where I'd expect cable to start weakening from there. I think the UK economy is still a concern. It's not been as weak as some people had originally believed, but I do think there is an underlying weakness in the UK economy. I do think its proximity to Europe and all the European problems is also going to be a concern. So whilst it's benefited to a degree from a safe haven status to both currencies over recent months, I do think once dollar strength starts to come back in, which I would expect to be a feature perhaps in the last quarter, I think we could see cable starting to suffer again.
Japan reported earlier that its gross domestic product rose less than expected in the second quarter. While the weaker Japanese growth data sparked talk of more monetary stimulus out of Tokyo, do you feel investors have held on to the yen out of concerns unsettling news over Greece may break in the coming week? And what are your predictions for the euro-yen?
I think Japanese yen is one of those currencies, the dollar yen rather, which is it's the bigger picture is not very interesting. It's been largely stuck within some ranges of recent weeks. I don't find that Japanese data and Japanese economic news has a major effect on it. It just affects it perhaps within some very small ranges. Overall, I still favour yen against other currencies in both the medium term and the long term, simply because I think it's the ultimate safe haven currency. It's not Europe, it's not the US. It's strengthened continually for a number of years now, and it's not really weakened. So I think betting against the yen is probably just never a good move. Like I say, I don't think Japanese data, other than a knee-jerk reaction, really affects it too much. I think because I expect euro to weaken at some point, to turn around and weaken at some point from the fourth quarter, I'd expect euro-yen to start declining more aggressively than dollar-yen. Dollar-yen may still hold its range for months, which is largely between 78 and 80. And I don't expect too much change for now, other than favouring the yen.
Thank you, Mr. Goldstein, for your insight into the currency markets and advice for all the traders out there. There'll be another Targets in Focus interview to advise you on what currencies to watch on Wednesday. But if you can't wait until then, there are plenty of news and reviews on the Dukas Copy website. Take care.